Hello and welcome today. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Thank you for joining us. Today is the 17th of August, 2021. There are a few things we're going to draw your attention to that we're watching, so you should be too. Thanks for watching. So Blanke Schein Wealth Management, we're constantly waiting for opportunities that markets will give us. And I'm going to reuse what we did earlier this week. On Tuesday, if you didn't follow along, here's where we are. On Tuesday, I reported some key technical levels as noted by the S&P 500. And what I said is the 50-day moving average, which is 4,337, is a key technical level. And at the time that we filmed this, we were at 4447. Now we're about 4,000 on the S&P. So we've come down and we're getting closer to this mark. And now the real question is, are we going to test the 50-day moving average and therefore bounce from the S&P 500? Or are we actually going to breach the 50-day moving average, which wouldn't be out of expectations right now because we're going through a seasonal soft patch. What does that mean? Well, the translation is after the second quarter earnings report, which we're just sort of going through with all the corporations, which, mind you, have beaten on the top side on gross and net. So on their earnings reports, well better than expected. But what happens on the conference calls is really where CEOs sort of set up the second half of the year. And here's what I mean. We know that we're transitioning from summer to fall. We know that there's a lot of uncertainty there, but more importantly, what CEOs do is they look sort of, okay, I got the first 6 months under my belt. We sort of know how we're going to finish the year relative to, because we've got sort of 2 quarters of data under our belt and sort of trailing 12. We know sort of what the trend looks like. But what they're really going to report is, you know what? They're going to express the uncertainty on a go-forward basis, right? And so they're going to say, hey, the Delta variant, or they're going to say the geopolitical uncertainty, or domestic, or Congress, or taxation. They're going to use anything they can as a CEO to report, quote unquote, uncertainty, right? They kind of know where they're going to land, but they want to bring down and manage expectations so that they can ensure by the end of the year they exceed expectations. It's no different than when my children come home and say, hey, mid-semester they're doing well, or maybe they're not doing so well. But if they're doing well, they're going to manage expectations with mom and dad and say, you know what, I'm doing well, but the second half I hear in my class, according to my other classmates, is it's harder than the first half. So don't expect that my performance in the first half is going to continue to perform on the second half. And here's what I know as a parent, here's what I know as an investor at the same time. I know my child. I know the consistency that they are, and I know what kind of student they are. I know what kind of dedication they do. Same thing is, so I kind of have a good gauge as a parent, unless something changes dramatically, how it's going to finish as it relative to how it started, unless something changes, right? Unless they get distracted, so on and so forth. Now, same thing as corporate America. We're seeing that play out. So the corporations, the CEOs who are magnificent at this, execution and actually doing really well, they have used every excuse they could possibly use, with the exception of the dog ate my homework, in their expectations on a go-forward basis. Therefore, we're in a seasonal soft patch. We're going to sort of see the transition. But the S&P, it wouldn't be unlikely. Remember, investors out there, remember our clients, keep this in mind. The markets pull back every year at least by 5% to 10% consistently every single year, and it's not uncommon to see a 15% every once in a while, every blue moon, 15 to 20 every blue moon. But we've had a 20% more recent than not, so a 5 or a 10 pullback, and we're seeing that on some of the big techs right now. Those opportunities are presenting themselves. Now, we believe, again, I even will go back to the board, as I said, we got a lot of cash on the balance sheet for corporate America on a go-forward basis. We also know the consumer is strong and could get additional support once Congress gets back and sort of passes sort of a stimulus or infrastructure 2.0, whatever you want to call it. The reality is that ultimately we will have more stimulus on the horizon. Obviously, there's some geopolitical things that could change some things sort of on the board with regards to Washington, with regards to, there's a thinly controlled balance of power in Washington right now, and sort of something happens, we could see in some movement on the board with regards to some seats, or who knows what happens on a go-forward basis. But Senate right now is a gridlock, and so therefore they have the votes with sort of the +1 if they need it at this moment in time to get stimulus going through and additional sort of measures passed. But as we sit now, all can change right now, of course. And what we think, Rob, what do you think about if we breach the 50-day moving average? Well, we're keeping our eye very closely on credit spreads. So really the easy way to think of that is high yield or the risk trade. High yields are going higher. That means that they're trying to attract more capital because there is sort of projected risk ahead, and that's what you're seeing. So they say that from the 10-year treasury to high yield market, credit spreads are widening. And in the bond market, as I said, we want to watch the bond market. You want to watch bonds and yields because that's a huge indication of what the stock market will do. Right now, there are some signs to be concerned in the bond market, as well as oil. Oil is another sort of risk trade, and you would think with all the instability in the Middle East, even though Afghanistan is not an oil-driven country, it's a mineral or a country, it's a mineral sort of a haven right there. But there's still instability in the Middle East that should drive oil prices up. Oil actually tested the 77 ceiling, which was back in, oil wasn't above 77 since 2015. And now it's pulled back, and now it's sort of looks like that's the upside cap for oil right now, and as it retreats. So as oil retreats, interest rates are sort of falling off, CDC or credit spreads, high yield spreads are widening. Those are all sort of red light dashboard things that we're watching to say, yeah, it's possible we could breach the 50-day moving average and maybe even test the 200-day moving average on the S&P 500. And all the other indices as well. That being said, like we said before, we have a high conviction list. We are waiting for some great companies to be at on sale prices because we believe in the management. We believe in the students that we have that that they're going to get A's. We believe in the management. We're going to outperform on a go forward basis. They've already proven that in 2020. All of these companies, all these CEOs with the uncertainty of 2020 have proven that they can make money and grow both top and bottom line. So why would that be different on a go-forward basis? They're just trying to manage expectations. So we want to wait for the technical sell-off, the seasonal soft patch, and go shopping because we are long-term believers and long-term holders of investments here for our clients at Blanke Schein Management. And I'll tell you, there are some companies right now that are looking phenomenal on a go-forward basis. We're just going to be patient over the next few weeks, maybe even a couple of months, and then take advantage of it because between now and year end, we believe that we could see Santa Claus come back to town, and that'd be wonderful. That'd be great for everybody. So thank you for watching. That's sort of what we're watching here at Blanke Schein Wealth Management, what we're staying on top of for our clients. And again, there's always opportunity out there, so we're just going to take advantage of it. Thanks for watching. Take care.